Welcome to the Stock Market Stories podcast. Today we have a really interesting guest, Pratik Chougule. Pratik trades prediction markets. He doesn't trade traditional financial products. He trades elections. Primarily makes bets on U.S. elections and political events when he thinks prices get out of line with reality. In this podcast, we talk about how prediction markets work, what type of data he uses to predict events, and different trading strategies. This episode is especially interesting to me because it's a pretty new and emerging market where I think there's tons of arbitrages due to capital constraints, political biases, and lack of liquidity. Pratik has spent his career in politics, serving several roles in U.S. politics, including one as a policy coordinator for the campaign of Mike Huckabee, the former governor of Arkansas. Pratik is also involved with InsightPrediction.com, a new and emerging prediction market. If you check out the show notes, there's a promotion where if you deposit $100, you get $50 in credit. Check out the show notes for more info, and keep in mind, at this time, Insight Prediction is only available to non-US investors due to regulatory reasons that we'll get into more in this podcast. Why don't we start by just laying out how you got into prediction markets, kind of what steps did you take in your life to get to where you are today?
Oh, sure. Well, I've been interested in politics my whole life, and I've planned on pursuing a career in politics. Again, pretty much my whole life, certainly since high school. In terms of the sort of interaction between politics and betting, I guess there were a few different things. When I went to college, that was kind of the peak of the poker craze. And so I had a regular game going at that time, and getting involved with poker definitely taught me a lot about just gambling and thinking in terms of probabilities. And then shortly after I graduated from college, I began to trade on the old betting site InTrade, which you might know. And that was fun. And then when Predictit got its no action letter and came into focus, at that time, I was the policy coordinator on the Huckabee campaign. And I could see just from being on the campaign day in, day out, that the Trump phenomenon was real, that he actually was on his way to getting the nomination, even when the markets were skeptical. So I put a bunch of money onto Predictit and kind of rode the Trump train through the primaries, and then I began to trade regularly after that.
Oh, right on. Where, out of curiosity, were you able to get Trump?
What price? Trying to remember, I'd have to go back and check, but I think it was in the 20s. But for a while, there was this very weird phenomenon going on where like a poll would come out showing Trump ahead, and sometimes the markets either wouldn't react or might even go a little bit down. And I think the reason was that traders were thinking about the last primary cycle on the Republican side in 2012, where if you recall, the party just kind of cycled through a series of front runners early in the primary. Like someone would go up in the polls and then they would get attacked and come down. And I think people thought for that reason that Trump was yet another bubble that was just going to burst. But he bore no real resemblance to the early front runners from 2012.
So what type of data were you looking at? Was it just like kind of sentiment around the Huckabee campaign and the Republican insiders, or were you looking at more harder data to make that trade?
Well, the interesting thing about that was all the indicators, the objective indicators that traders and the markets usually look at were pointing to a Trump victory. I mean, he was always well ahead in the polling. You could just see the energy in terms of his rallies and how much media time he was consuming. Financially, he had no real problems because he was funding his own campaign. I mean, there were all these indicators that he would do well, but I think the reason why the markets were skeptical was, number one, he was such an unorthodox and undisciplined candidate. I think the other reasons were that the other campaigns were kind of assuming that they were underestimating the strength of the Trump candidacy. If you recall at that time, kind of the thesis among the other candidates was that there was no point in attacking Trump because they wanted to fight among themselves and go one-on-one against Trump. And then there's just an enormous amount of bias in the markets. I think traders, for the most part, didn't like Trump, didn't want to see him be the nominee. And so even pretty late into the primaries, when there was no real reason why Trump shouldn't have been trading in the 90s, there was still kind of a bargain just betting on Trump even late in the game.
Would you say it's fair that maybe the markets have shifted the other way, where I know on Star Spangled Gamblers, your podcast, and multiple other people in the community, they believe in this whole red wave thing, but they think the markets have hugely overshot it because like lots of market tourists, sort of the MAGA people coming in and buying up, maybe, overpaying for out of the money options. That's to use like a stock market term.
Yeah, well, we'll find out. It's Monday as of this recording, but I mean, look, I think there was a lot of talk about dumb MAGA money and the like, really the last two cycles, and each time, I mean, I think the even the markets in many ways ended up underestimating how well the Republicans would do. I mean, obviously, the markets, like everyone else, missed the mark in 2016 on Trump, but even in 2020, I mean, Trump considerably overperformed what I think a lot of people believed. I myself did not see the extent to which Trump would run kind of a strong campaign in 2020. So we'll find out this time around if the markets are overcorrecting or not. But I would say the markets and the way that they have had Republicans and Trump trading high compared to the polling and other things, I think the markets have looked pretty good in retrospect.
Yeah, they've kind of adjusted to, I guess a lot of people saw, and there's that whole meme of like Nate Silver being wrong and everything. So maybe over adjusting or maybe right about right.
Yeah, look, I mean, all as you might know from following our podcast, I mean, all year, even when people thought that abortion and other things would bail out the Democrats, I've been arguing that kind of all signs point to a red wave. But over the last few weeks, the markets themselves have priced in a red wave. In many cases, I mean, so massively that I don't see a lot of real bargains on the Republican side. So I'm just kind of putting money for the most part in kind of underpriced favorites, or just looking for opportunities where there's too much market exuberance. But in a lot of these races like Arizona and other places, New Hampshire, where even if we see a red wave, I mean, I think Democrats have good reason to think that their candidate can prevail. The markets really are pricing in a pretty heavy red wave with high Republican pricing.
Right. So the way you talk about prediction markets is similar to any other sort of gambling pursuit like poker. It's all expected value. You're putting what you think is a right price on a bet, right? Like you're not shooting from the hip and saying, I like this guy. So what type of things do you look at? You mentioned a number of indicators earlier. Are you building like turnout models and, people get quite sophisticated. I remember in the 2020 race, there was a guy called Data Republican. I don't know if you saw him around. And he built this giant Florida turnout model, really sophisticated. It was all open source. I must assume he was betting on Trump winning Florida. But so, like, to what extent do you use more sophisticated like data science techniques and whatnot?
Yeah, well, look, there are a lot of different ways to gain an edge in these markets, as with anything else. And I'd be curious if you agree, but in my view, especially when you're talking about a certain type of political market, I mean, there are real qualitative factors where I would argue there are limits on how much you can model the stuff. But, there are certainly traders who rely on pretty heavy and quantitative models and sophisticated modeling. And I think Nate Silver has done a lot to pioneer some of that work. My own view is a little bit more on the qualitative side. I mean, I think to me, the starting point is the market price itself. I think one can debate the extent to which market prices and the wisdom of the crowds and all that produce an efficient hypothesis. But I think that, especially for markets with a great deal of liquidity and open public information and the like, to me, the starting point is always to look at, well, what is the aggregate wisdom saying that the right price is? And then I look at that price as a baseline, and then I try to interrogate, do I have a strong reason to believe that the markets are wrong or incorrect in some way, or that, something could be happening that the markets aren't pricing in that might dramatically move the price up or down. Not even, at the very end, but even just in the coming weeks where I might be able to make a short-term trade. That's kind of the starting point of my analysis. And then I'll look at polling. I'll try to follow the news cycle, anticipate what will happen, look at candidate quality, look at historical models, and then build out a thesis from there.
Right. I have a question for you, but right before that, I want to ask you about maybe the breakdown, or maybe just a couple misses from like the polling industry in the last few cycles, and how you're adjusting to that. And are you fading pollsters? Like, I know polls move prices a lot, and there are some that have been extremely unreliable to the point that you're questioning, like, are they trying anymore? So how do polls come in, and do you prefer certain pollsters over others?
Yeah, I mean, look, in the last couple of cycles where I lost money, there were many reasons, but of course, I would say probably the prevailing reason was that I just had too much confidence in the polling. I think that I was always a bit skeptical of the thesis that the polling industry is totally broken, just because I think a lot of people, with a partisan agenda or whatever, I mean, the easiest thing to say is, oh, well, it doesn't matter that my candidate is failing. I mean, the pollsters are partisan and so forth. But when you look at just the magnitude of the polling error in 2020, I mean, especially in some states where they just weren't even close, I mean, it's hard to deny now that the polling industry is fundamentally broken. Now, we'll see if they can figure it out or not. But I guess my own view is that I'm maybe leaning a bit more into trying to understand fundamentals, maybe looking at other qualitative indicators, and maybe devaluing a bit polls. And I suppose the other thing I'm doing too, which is maybe something I should have been doing already, but just looking at polling and polling methodology and crosstabs with a bit more scrutiny. Like, I no longer think that just because someone is a so-called reliable pollster, or they have a reputable brand or so forth, that their methodology is really something you can take to the bank, so to speak.
Right. It's sort of like in markets when a lot of people will look at just a top line number or EBITDA, and the more astute investors will break into the income statement, cash flow statement, and say, like, okay, let's see how this number has come to. So you're kind of looking in the, like you said, crosstabs and demographic data to see if it matches up the kind of registered likely voter population there. So moving on.
I'll say one more thing about that too, which is that our politics have just become so tribal and partisan and heated. And I know that's kind of a banal thing to say, but the reason I think it really matters to your question about polling is that this class of people who are political experts and pundits and really kind of brand themselves as being, high quality statisticians or whatever. Increasingly, I think that when you look at why polling and other models have fallen short, I mean, I think it's a very legitimate question to ask whether or not political bias of the people doing this work may have had something to do with it. I mean, when you have like models saying that there was a 90 whatever percent chance that Hillary Clinton would win the 2016 election, I mean, it's hard for me to believe that, were the situation reversed, that all these left-leaning Democratic pundits would be as eager to dismiss a rival candidate. So, as much as I don't like to kind of impugn people's motives or whatever, I mean, I think just interrogating the biases, even of people who brand themselves as nonpartisan and have legitimate credentials, I think it's maybe something I'm looking at a bit more carefully going forward.
Yeah, I think that's really fair, especially because as far as I know, a lot of the money in the polling industry comes from cable networks and newspapers who very clearly have agendas. So Fox News pays for a poll, there's probably some sort of incentive for the pollster to make it lean a certain way, and the same with CNN. So yeah, moving on from that, totally agree with you there. So you have an ebook. I'm not sure if you or Alex wrote it, but on the Star Spangled Gamblers website, there's an ebook called what's the name of it?
How to make money from political predictions.
Right. It's very good. It's short and sweet and lays out basic great strategies. And so one of them that I didn't see on there that I heard Domer or Doma talking about with you guys on your podcast is sort of like the momentum trade, where you guys are very excited to fade the hype. So like we were saying, maybe in some races, this red wave is being overestimated, and people like Lee Zeldin are trading at 30% when maybe that's not fully accurate. You never know. And so you and Alex are, happy to fade that sort of price. But Domer was talking about how he'll ride the hype for a bit. I just was wondering if you ever make trades like that, and if the momentum aspect comes into your thesis at all.
Yeah, no, it's a good question. I mean, I think it very much depends on the market and the trading strategy. I mean, sometimes, if I have a really strong view on what let's say I'm betting on an election and the election's in November, and I just have a really strong thesis as to what the outcome will be, sometimes I might ignore the short-term momentum swings and just keep building a position with the idea of holding to the end. So an example of that might be the Georgia governor race with Stacey Abrams. I kind of knew right from the beginning that Stacey Abrams was going to be hyped, but that every indication pointed to a comfortable Republican win. So I kind of ignored the news cycle there, just kept building a position there, and waited for the price just to gradually move up. On the other side, though, might be something like the Pennsylvania Senate race, where I have no idea who's going to win that race. I don't even have a strong enough thesis to know if the market price is anywhere in the ballpark of being correct. But I had been following the news stories indicating that Fetterman had some pretty serious health issues. And so going into the first debate that they had, I mean, you have this entire story on the one hand of Fetterman having pretty serious health problems. And then on the other hand, you have a guy, who spent his entire career being a TV star hosting a talk show. And yet, he's nevertheless riding into the debate with low expectations. So I thought, okay, I don't really need to know what the outcome is going to be here. I just think that probably the markets are not pricing in the idea of a Fetterman meltdown and or a compelling performance by Dr. Oz. So I placed a bet on that. Fetterman didn't end up performing well. It may or may not matter, but I knew that the markets would react to poor performance. And so I just kind of watched that price move and then sold it off, a couple of days after.
Right. So some of the strategies you talk about, especially this Fetterman trade where you kind of predicted what would happen in the debate and just position yourself accordingly. Some of these sorts of trades, they remind me, and I'm only 25, so I do not speak from experience, but they remind me a lot of what prop traders talked about they did in the 90s, right? So they would just pick off sitting limit orders after a piece of news came out or something like that. Wondering, now that you have Kalshi coming in, I assume they're pretty well capitalized. It's a really, really nice platform. I'm wondering if I don't want to say fear, if you're worried about maybe quants coming in, this market getting more efficient, because some there's a lot of easy money trades in prediction markets. And I wonder, as an insider to the market, do you see these sorts of, not hedge funds, they're not capitalized enough, but more quantitative minded people coming in and arbitraging away some of the easier money?
Well, no, I don't worry about it too much. I mean, I think, first of all, a lot of the reason why these opportunities even exist now, I would argue, is not fundamentally because of a lack of liquidity or things like that. A lot of it just has to do with regulation and arbitrary limits set by regulators. So, for example, I mean, even on Predicted, which all things, by the standards of the financial industry, I mean, there's not all that much money here. I mean, even if they were to get rid of the $850 cap on how much individuals can trade, I mean, that alone, I think, would move a lot of these markets to a more efficient price. The markets in the UK are deregulated to a much greater extent. Look, I think at the end of the day, having markets with more liquidity is ultimately better. I think that it lends itself to markets that more inform the public interest, that draw more attention, more media and others will cover it. And at the end of the day, politics is such a human, emotional kind of a game that I don't know that, maybe I'm wrong, but I'm skeptical that really these pure quant guys will be able to gain an edge or disrupt it to the same degree as maybe other financial markets out there.
Gotcha. Speaking of the quants, I realized I just signed up for Kalshi. I'd never even heard of them until like a couple of weeks ago. I see that they charge 0 fees when you make a market. Do you know of any traders that are like making consistent profits, just making markets on Kalshi?
Oh, I don't, but that's an interesting question. That would be a good question to ask someone at Kalshi. I'd be interested in what they say about that.
Yeah, I was contemplating just going in there and trying to make markets because obviously it's like very new and you're not competing with the sharks like you would in financial markets. So very interesting. If anyone listening has any information on that, reach out to myself and Pratik. I'm sure Pratik would be very interested in that sort of thing.
Yeah, absolutely. No, Kalshi is a very promising new market entrant and company trying to disrupt the space. And if they end up getting approval for their election markets, as you said, I think they'd be allowed up to 25,000 to bet on that. So that certainly would be a game changer in the American context.
Yeah, definitely want to ask you about the whole thing with the CFTC and stuff moving on. Before that, just to shift a little bit, I want to ask you, can you walk us through a bet that you've made at any time in history, I guess besides the 2016 Trump bet, since you walked us through that already, that encapsulates your idea of like a great prediction market trade?
Oh, huh. Well, I'll tell you one that I only partially made, but some of my friends in the community really cashed in on, which was the Alaska congressional race. This is the race that ended up opening up because, after, I'm forgetting his name now, I should know this, the incumbent congressman died. So there's this one congressional seat that covers the entire state of Alaska. And Sarah Palin jumped in right before the deadline at Trump's request. And then there were a whole number of other candidates that came in, sort of other Republicans, independents, Democrats. So the main Democratic candidate, Mary Peltola, I believe early on she was trading at just 2%. And so I got in pretty early there, not because I even knew anything about her. I just figured that Alaska, yes, it's a red state, but there's a sizable enough Democratic Party there, and so whoever emerges as the Democratic frontrunner would at least have a baseline level of support. So I just got into it thinking, okay, I'll be able to watch the price go up a little bit and sell it. But at least one guy I'm remembering bought her at 2% and just kept holding and holding and holding, and she ended up winning the race eventually. And so that you make one trade like that, you can get a lot more wrong the rest of the cycle and still end up with a nice profit.
Yeah, no, that's a good one. So I know we touched on a couple of the strategies in the ebook, but can you walk us through generally how you view prediction markets, how you approach them, how you get an edge, like sort of basic strategies. Obviously, you don't want to give away the secret sauce, but
Yeah. Well, look, I think the first thing to think about is to have kind of an opinion on um, why the market price is what it is and how efficient it is. So a lot of the reasons why I think there's a great deal of curiosity and interest in these markets from academics and journalists and others is that they buy into this idea that the crowds inherently have wisdom. So when you just you ask a question, frame it the right way, and then you just allow a bunch of people with money to come in and bet on it, that the market price, the aggregate price that they come to itself has wisdom. Now, there there are different kind of approaches or attitudes you can take to that question. Just because a market price might be kind of an interesting indicator, sometimes it's correct, sometimes it's wildly off, and typically there are times and places and times of markets where the wisdom of the crowds tends to be accurate or not. So I would say that is kind of a first starting point. And I would say, just as like a rough guideline, I mean, prediction markets tend to perform pretty well when you look at the price on election night, or not election night. I mean, maybe like the day before the election. Usually you have to think pretty hard if you're going to take a very contrary view to the markets. It's not that, you're never wrong or that the markets are always right, but they tend to hold up pretty well. But, in the weeks and months before the election, I mean, markets can be very volatile. They can swing on any type of gossip. They can move for all kinds of irrational reasons, or just the market price may be wrong. Maybe I would argue that's a time not to take the market price all too seriously and really start from first principles and form a thesis.
right. So, can you walk us through, with that in mind? Can you walk us through how you're positioning into this midterm election? Because I don't want to date this podcast, because I think this is a great introduction for sort of financial markets people to learn a little bit about prediction markets, and that there's a lot of edge there, probably more so than most futures contracts and whatnot. But midterms are tomorrow. I assume you're making a bunch of trades and have a lot of opinions. So can you walk us through a couple trades that you're thinking about?
Yeah. Okay. So I'll start with maybe some of the more conservative ones that I'm making. So maybe like one question I'm thinking about is, where are there markets where, in my view, the actual odds are like 97.3 or 95.5 or something, where, the odds of an upset are very low, but for whatever reason, the markets are not pricing it in the extent to which this might be a done deal. So, something that comes to mind might be a few of the Senate races, like let's say Wisconsin, where you have to me, the fundamentals all point toward a Republican win. You have an incumbent Republican senator in a year that probably favors Republicans, with a track record in a state where polling tends to underestimate Republican strength. And so then the question is, okay, well, and the polling itself is pointing to a Republican win. And so then the question is, okay, well, why is it that the markets are not regarding that as like a 95.5, which is, roughly where I would put it. I mean, as of this recording right now, it's more of like an 86.14 market. And I think a big part of the question is that the Democratic candidate, Mandela Barnes, is, he's just someone who, like, a certain type of trader in these markets just likes. He's a younger candidate. He's an African American. He's very charismatic and dynamic. He's someone who I think national Democrats have a lot of hope for. And so in these kind of markets where, the demographic skew, younger, male, Democratic, urban, my view would be that there's a pretty good chance that price is just kind of trading where it is, because there's a lot of wishful thinkers in the market. So I'm very happy to go into a market like that and, get in the mid, even high 80s on the Republican, and just watch that one go to 100 after election night. That would be like one category, and we could go through a number of those where the markets are trading like 85.15 or something, where actually it should be closer to 95.5.
So do you find, especially with the, what'd you say this guy's name was, Barnes?
Mandela Barnes, yes.
Yeah. So Barnes, I guess, is a popular guy, and a lot of his supporters are betting in the markets. You get a lot of tourists. So do you find that generally it's harder to find an edge in markets where it's more just clinical and boring, and like, I don't know, some sort of turnout market, where the tourists aren't likely to flock to?
Yeah, I mean, like I can give you an example. So predicted how to rein in these markets due to regulator concerns, but for a long time, some of the most popular markets were just tracking how many times would Trump tweet. And so, this is the kind of market where like some amateur or whatever might, sort of think that, oh, this might be fun to trade in. But I mean, not surprisingly, when just week after week these markets are coming, there's a core group of just predicted experts who have all kinds of models. They know exactly what to track. They know why the markets might move, when they'll move. They know when Trump might tweet. It's just kind of a clinical sort of a process, even though Trump's tweets themselves were quite colorful. Even though I'm trading pretty regularly, that wasn't the kind of market that excited me. It wasn't the kind of thing where I really wanted to do the work. So I kind of stayed away from that one. But yeah, certainly, I mean, polling markets, like where Biden or whoever, what their poll numbers might be, not like 3 months from now or something, but next week. I think there's just more numbers crunching there. So that's certainly a profitable way to engage in these markets, but it's not one where I necessarily have an edge.
Right. Yeah. And a lot of these brings me to the question of, to your knowledge, has anyone been charged with like insider trading or something like that using these markets? Because it seems like I'll see some bets on Predictit and Polymarket where it's like, wow, like a low-level person can manipulate this metric and make a ton of money. And it just, I'm not obviously trying to shade any light against prediction markets. I love them. I'm just sort of curious about that.
I'm not aware of anyone who has been prosecuted for that. I think if there were to be any sanction, my guess is that it's much more likely that it would happen not from the government, but just from someone like violating confidences within a, I don't know, Senate office or maybe even a private sector employer or something. But I think that, maybe part of the reason why there isn't the same degree of scrutiny about insider trading in these markets is because insofar as these markets are intended to serve an academic or public interest purpose, in many ways, insider trading is a feature rather than a bug of these markets, in the sense that, you actually, if you're hoping that the market price really tells you something about the real world, you actually welcome insider trading. You want people with as much knowledge as possible to come into these markets, trade on the basis of that information, and drive the market price to a more efficient price ultimately, because that tells you more about where our politics and society are ultimately heading.
Right. Yeah. I know Domer, or is it Doma or Domer?
I say Domer. I have no idea what he. I think, in fact, he goes by both usernames on different platforms.
Gotcha. Yeah, I
open
heard
to
him.
Interpretation.
Gotcha. I heard him on Chat with Traders, which is like the biggest trader interview podcast. And the best one, in my opinion. And he was, I don't know if he talked about it there, or maybe he tweeted it, but he was talking about how some guy created a fake union in Portland to manipulate a Predictit market. And because of the open nature of Predictit, you can see who the biggest bettors are. He was able to track this guy down, and the guy admitted to it over Discord. Just a really interesting saga that just played out. Sort of like something you'd read in Matt Levine's Money Stuff or something. So
yeah, no, it's I mean, it's quite astonishing the lengths to which people will go once they have even a couple dollars in a market. There's just something psychologically about having a little bit of money at stake. The lengths to which people will go to make sure that they get their money back.
Yeah, or just not realize a loss. I mean, that's it's just a hit to the ego for a lot of people. And
yeah, no question.
yeah, because you can only bet $800 on predicted, so you're not going to become a millionaire. So taking these risks is kind of crazy for like the max payout of like 40 grand or something.
Yeah.
So we were talking a bit about Predicted and Call Sheet before. So Predicted got a some sort of notice from the CFTC, and they say they might shut down. And is it January? And now we have Call Sheet coming into the fray. So can you just talk about some of the regulatory happenings? Because I know this is a big thing of yours around prediction markets, what you think might happen and whatnot.
Yeah, so basically Predicted was able to operate legally because the CFTC gave them what is called a no action letter. So it's not necessarily explicit permission to run the markets, but it's more that basically they gave Predicted a letter saying, look, we won't take enforcement action against you. And in exchange for the no action letter, Predicted had to abide by a certain set of terms and so forth. Now, earlier this year, the CFTC revoked the no action letter. And they basically told Predicted that you can operate until February 15th. After that, we're no longer giving you a no action letter, so you're on your own. So there's right now Predicted has filed a lawsuit against the CFTC, challenging the decision by the CFTC to take away the no action letter, and barring intervention by the courts, it looks like Predicted is going to shut down in February. Now, in terms of Kalshi, so Kalshi kind of pursued a different regulatory route with the CFTC. They basically filed for permission to be kind of a registered entity, and they sought explicit permission by the CFTC to offer contracts on the midterm elections. And they were hoping to get a response before the midterms, but they didn't. So, it's clear now that Kalshi will not be able to offer election contracts, at least for this midterm cycle. So the space is very much in flux, and it remains to be seen whether or not there will really be any kind of regulated legal way to bet on these markets by next year.
Do you have any plans to migrate to Polymarket or any number of like crypto prediction exchanges?
Well, so I'm an advisor to one new exchange. It's called Insight Prediction. And if you have questions about that, you can definitely DM me or whatever. So like at Insight Prediction, we're just kind of waiting to see how these regulatory issues with Predicted and Kalshi will unfold. And then we'll be able to kind of know what regulatory course to chart. With Polymarket, as you know, they made a big splash on the scene, and they basically made the argument that the technology on which the site was based, the way it leveraged blockchain and so forth, did not require them to register with the CFTC, and the CFTC ended up essentially rejecting that argument, and they took enforcement action on Polymarket, and they ended up reaching a settlement where Polymarket had to pay a fine and basically move offshore. So, at least officially anyway, they're not allowed to offer markets to people in the US. But, it's kind of an open secret that there are people in America using VPNs to get on the site. I'm not one of them. I'm a bit more risk averse, but there are other people doing that.
Gotcha. Can you tell us a bit about Insight Prediction?
Oh, sure. Yeah, it's a new company started. It is sort of intended to be a one-stop shop for prediction markets, not only in the political realm, but also with sports betting and other event contracts. The founder and CEO is someone by the name of Doug Campbell, who's very interesting. Maybe you can have him on sometime, but he's a PhD economist, also worked in the Obama administration, and he himself is a gambler in politics, among other things, and made quite a bit of money doing this, and decided to take some of his gambling winnings and start a new company.
Oh, that's amazing. And yeah, I would love to have him on. Sounds very interesting guy. The idea of sports contracts, I'm sure there's someone out there doing that already, but that is something that I think would be a huge breakthrough, because nobody wants to pay DraftKings. You know, no one wants to bet against DraftKings. I want to bet against the Ravens fan that, you know, thinks Lamar is going to throw for 400 yards or something. You know, like that's exactly what you are every day in the political markets. And that's what scares me away from even touching any sports betting, because it's like the bookmakers are so smart. Like, you're not going to consistently beat them unless you're really sharp. So that, can you talk about sort of the non-political markets that Insight intends to make?
Oh yeah, well they already have them. So if you go to here, let me pull it up, insightprediction.com, and you can see on the website's pretty intuitive to use, but actually one of the category of markets on Insight which are somewhat unique is they have offered and are offering quite a number of markets actually related to the Russia-Ukraine war. The founder, Doug, was teaching in Russia actually at a university there, and so he took a keen interest in this. So there are a number of markets there. Everything from like, when will the Russia-Ukraine war end, to whether or not a certain key city in this conflict will be under Russian or Ukrainian control. So those are very interesting markets, and I think that they do a lot to enrich the discourse as well. Then there's kind of the whole array of different sports markets that are offered there. Then there are the American politics ones, and then there are also others just in economics and science and a few others. But we're still working on getting more liquidity onto the site. But I think that if this project at Insight Prediction succeeds, it really will be a place where you can go if you have an interest in prediction markets across an array of domains, and without too much difficulty, just place bets in all different areas.
Can U.S. investors currently make deposits and trade on that site?
So what we are doing at Insight Prediction is, until we have more regulatory clarity, we're more or less using the poly market settlement with the CFTC as kind of a guideline on how to manage regulation. So as of right now, no, if you are in America, you cannot trade on the site. But we are getting a lot of liquidity from traders outside of the U.S. right now, and we're hoping, obviously, to break into the American market.
Cool. Yeah, I'm rooting for you guys. The idea of event contracts for things that have been traditionally handled by bookies is really, really exciting. I think it stopped a lot of smart people from getting into that field, because no one wants to pay a spread, you know?
No, exactly. And I think, look, I mean, one of the reasons I'm critical of the way these markets are regulated now is that because it's so hard to have competition in the space, Predicted, for example, which retains something of an effective de facto monopoly, because they haven't faced as much competition, they've basically gotten away with really high fees that they're charging in these markets, which I think are short-sighted of Predicted, because they, in addition to just deterring participation, that they're so high that they actually end up distorting the market price and shaping behavior in ways that leads to inefficient pricing in the markets. But, you know, as with many other things, I think competition will eventually resolve that issue.
Yeah. That's thanks for filling us in on that. That's really exciting. I was not aware that you were working with this site. So definitely check them out. What is it? Insightprediction.com?
Yep.
Very cool.
And maybe we should have talked about this before, but if any of your users want to start trading on the site, we can definitely give them a promotion. So just have them DM me or DM the Insight Twitter account, and we can get you started on that.
Great. Yeah, I'll put all those links in the show notes. So we were just talking about how Insight offers sports markets and other markets. Do you trade non-political events, like something related to, what NASA is going to do, or what Musk is going to do, and or even, event contracts in the financial markets?
For the most part, I stick to politics, but I do. So back when I was trading on Polymarket before the regulatory crackdown, they also had a few sports markets. So one of the better trades I made there was on professional tennis, where I believe it was at the U.S. Open, where Djokovic was going for his. I think I'm forgetting the details now, but I think he had won the last three majors or Grand Slams rather. He was going for the fourth, and so the markets had him as a really heavy favorite going into the finals. But I knew enough about tennis just from playing it as a kid and watching casually that I at least sort of felt comfortable placing a bet. And I had been watching enough to know that the other finalist, Dmitry Medvedev, had just been playing really, really strong throughout the tournament. Like, he had barely dropped a set. He was young and hungry and just a talented player. And so what I thought was the odds were just so overwhelmingly in Djokovic's favor that, in any kind of a professional tennis match at that level, I mean, all these guys are just such high quality candidates that in any given match, anything could happen. So my thought was place a bet on Medvedev, and even if he wins a set or something, I figured the markets would panic, and that's what ended up happening. So that was an example of where I got in on a non-political trade. But I would say, like, my core interest and edge is really in American politics.
Do you see that perhaps changing if, let's say, tomorrow Insight gets the right of way to operate in the U.S., all the markets they want to operate? Do you see yourself start kind of teaching yourself about, like, the sports stats and all of these other areas, or kind of stick to your bread and butter?
Oh, yeah, sure. I mean, look, it's already happened, and it's not just me, but a number of people in this space. Like, we might start trading in American politics because it's something we're interested in, but then, like, they'll offer a line on a foreign election, and suddenly, like, we're all finding ourselves reading about Brazil or some Peru or some country that, like, none of us know anything about. But, as we were talking about before, I mean, just when you have the opportunity to make even a small amount of money on the line, it just creates this really powerful incentive, and it creates an entire community of people who can get up to speed on a foreign country, and do so with a surprising degree of efficiency. So, to me, I mean, ultimately, the reason to get involved with these markets, the money's nice, but, most of us, I think, if we really applied the same time and energy, like, to building a business or something, I mean, probably over the long term, that's going to be more profitable. But yeah, I mean, as long as these markets are available and the topic is interesting enough, and there's a whole community of people to help you get up to speed, I absolutely think that an interest in prediction markets could open the door to just learning about things well beyond what we think of as our core interests.
Yeah, certainly. I've heard a number of political traders talk about late nights researching some sort of foreign country that they've never been to or don't understand, and they win their bets. So shifting courses a bit, do you trade in the financial markets at all, or did you get into that prior to prediction markets?
No, I never did really. I've always thought maybe, like, if I end up having more money down the line or something, that maybe I might get into investing in startups or something, but I'm not there yet. And I guess I never found myself interested enough in, like, I don't know, the stock market or things like that to really get involved. And just given how many people are doing that on a day in, day out basis, I mean, maybe I'm wrong, but I'm thinking that it would be a lot harder for me to get an edge there compared to something like politics, which I'm doing as a career and have really followed deeply in my whole life.
Right. Yeah. Jack Schwager, who wrote a bunch of really great books on the market, he says there's a million ways to make money in the market, but they're all really hard to find. So it's like, it's very hard to find a way. But when you do, it's sometimes for a year or so, you could really run into the ground and kill it. So I was going to ask you the primary differences that you see, but if you don't trade, that's not a valid question. But I do have to say, if these prediction markets ever disappear, the way you talk, I mean, you sound like someone that thinks exactly like traders. I talk to a number of traders, and you have a very similar mindset. So down the line, if you're ever interested, it would be, you'd probably be good at it if you put the work in, I imagine.
Oh, no, I appreciate that. Well, look, I think you mentioned Kalshi before. I mean, I think that this is one of the real promises of the company. I mean, I think one of the reasons why the company started, and I think the insight, which I think is entirely correct of the founders, is basically that in these traditional financial markets, so much of what what traders and institutions are trying to account for or hedge or react to are fundamentally political questions. And I think what Kalshi's vision is to basically create more direct ways of hedging political risk in the markets and then ultimately democratizing that. So, if you're a retail trader, you're not going to go to Goldman Sachs or something and ask them to create a financial product for you that gives you exposure to an American election or something. But if you're a retail trader, you may nevertheless want to hedge that risk or get involved with it, even if you're fundamentally trading at the stock market or something. And so I am very interested in following the space and maybe seeing if there's more of a marriage or direct link between these markets, and then figuring out maybe how to use political knowledge or expertise to gain an edge in traditional financial markets where otherwise it might be difficult to do so.
Yeah, what's so interesting about prediction markets is you can make a binary bet. If this happens, you win the bet. You get 100 cents on the dollar. Whereas, just as an example, I remember in the 2016 election, a bunch of people that thought Trump would win, they were buying coal and uranium as basically just as a alternative to buying Trump on, let's say, Predict It or something. And there's a number of situations that come up every day where people are buying an asset to bet on a binary event, but that asset is, influenced by so many factors, and one guy comes in with a big order, and it doesn't really matter what the event outcome was. So I think in the years coming, should these markets continue to thrive, a lot of finance people are going to get really interested in it. Should it have the liquidity?
Yeah, absolutely. So, I mean, one of the things I'm working on right now, I'm working with the Center for Effective Altruism, basically to engage in a educational campaign on kind of the public interest value of these markets. And one of the arguments that my colleague and I, Solomon Sia, are bringing to the fore here is that what we're basically saying is, look, if you look at practically at these markets today, the vast majority of people engaging in them are speculators. But I mean, these markets are in such an infancy that if they can be allowed to grow and flourish and have higher betting limits and the like, you could see very real hedging activity coming into these markets and people coming in from the financial industry or from an array of institutions and engage in these markets, not because they want to gain some profit as a speculator, but really just to hedge very real political risk in important industries. And so we'll see if regulators end up accepting those arguments. But if they do, I think that's definitely an area to watch.
Yeah, absolutely. And sort of on that note, I don't know if you've seen, but the CME, they have event contracts now where instead of buying a crude oil contract, you could say, I believe crude oil will close between 88 and 91 by the end of this day, yes or no. And it's traded just like a Predict It market, 0 to 100. So it does seem like a lot of people in the traditional finance world are sort of coming around to it. Maybe that would be something that you would dip your toe into,
Yeah, look, I mean, the regulations are very tough right now in this area, but I'm optimistic that in some shape or form they're going to break out. I just think that um, there's so much political risk out there. There's so much of an interest in these markets, and at a time when our political discourse is so corrosive with uh, disinformation and fake news and all these other things, I think, especially as we talked about with the decline of the polling industry and other things, I think a lot of people, for different reasons, are interested in these markets. And ultimately, I think that so many entrepreneurs in the space are going to be tinkering with different models that at some point the entire project's going to reach escape velocity where regulators can't meaningfully even kind of hope to contain them. And we'll see when that happens, if it happens. But I think for the reasons you mentioned, in some shape or form, I think these markets are going to reach their potential.
Right. So we're getting on in time here, but you and Alex, I think his name is Keen Dog on Twitter, have an excellent podcast and basically one of a kind in the space called Star Spangled Gamblers. Can you tell us a bit about that?
Oh, sure. Well, it was founded by what had happened is Alex and I were working together in politics and journalism and so forth. And I was trading in these markets, and I had a small kind of private Facebook group that I had with a few friends who were trading, but also just other friends who weren't trading, but who, knew something about politics or whatever, and who could kind of give me feedback and insights that would help me trade. And so I added Alex to that group, and he became fascinated with these markets. He started trading themselves, but he also had the insight, maybe drawing on his experience in Hollywood, that this is really like a vehicle or a mechanism to write about and talk about and think about politics in our society in a new framework with a new vocabulary. So he ended up starting a blog, and as he was learning how to be a good trader, he also was writing about it in a very funny and entertaining way. And then over time, the blog became a podcast, which has now been running for a couple of years.
Yeah, you guys put out a lot of episodes, and you interview a lot of other people in the space that, without that podcast, I wouldn't be able to find these people because they don't have a big platform and everything. The way, in the trader world, there's people on Twitter and whatnot with over 1 million followers, right? But in an emerging space, I think you guys are really providing a lot of, promotion to it in like the best way. So, I enjoy it. I hope my listeners do too.
Oh, thank you. Yeah, look, I mean, the insight that really, Alex, I should give him credit, but I think what we're trying to do here is that there's been a lot of interest for a long time in prediction markets and political markets. I mean, if you can search in the academic literature, economists and others have been talking about these markets for many years. But I think the insight that Alex has had, and I think that we're trying to really develop at Star Spangled Gamblers, is that these markets are just really fun. The community around them are really funny. And a lot of people talk about the gamification in kind of a negative way, but we very much lean into that. Like, we joke about being kind of degenerate gambling heroes, and where some people kind of wince at the at the trash talking in the comments, we really find that stuff to be funny. And what I think we found is that when you lean into the entertainment value, you lean into the fun of it, you realize that even though part of the motivation may be fun, the communities that form around this for all different reasons end up actually producing a discourse and a community and an exchange of ideas that I think is actually far more robust in many ways from what you see on cable news shows and even kind of respected newspapers and the like. So we're very early in the process, but I think our hope is that we can really be a nucleus for this emerging political gambling community that I think is only going to grow in the coming years.
Hey, right on. Pratik, do you have anything else you want to plug before we call it quits?
Oh, no, I just want to thank you for having me on. I really appreciate your interest in these markets. And if you want to follow me, you can find me on Twitter. It's just PJ and then my last name. You should obviously check out Star Spangled Gamblers. We have a Twitter account, SS Gamblers. And if you'd like to trade on insight prediction, DM me or our account, and we'll get you set up with a promotion.
Awesome. Thank you for that, Pratik. You've been an awesome guest, and I think you've introduced this market and as good of a way as possible. And I think a lot of people will be really excited to test it out, because some of the strategies you mentioned are things that have been arbitraged away by machine traders in traditional finance, and so traders, they flock to that stuff. So it's been really great, and I thank you so much for coming on.
Oh yeah, no, and thank you for having me on, and I want to congratulate you also for having this podcast, and I'm sure we will both continue to grow in our efforts in the coming years.
Oh, thank you for that. All right, Pratik, it's been great, man.
Great, thanks.
All right, good luck betting the rest of the midterms.
Yeah, I'll need it.